Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kaina Chainwala from Kotak Securities Commodities Research Desk, and today we will be discussing ongoing developments in the commodity markets, factors influencing market sentiments, and uncovering the latest trends. So let's delve deeper in this ever-changing world of commodities. So last week has been quite eventful, and as we saw that Donald Trump's commanding victory in the 2024 US presidential election triggered a sharp rise in the US dollar and pushed US stock indices to all-time highs. Investors started quickly reassessing their outlook, factoring in the potential impact of Trump's economic policies, which includes higher tariffs and tax cuts aimed at boosting domestic economic growth. However, these policies are expected to come with significant trade offs, including a higher fiscal deficit and an uptick in inflation. Broadly, his Nevertheless, his policies are seen as beneficial for the US economy, leading to a rally in dollar and US equities. The greenback surged to a 4-month high of 105.44, while all three major Wall Street indices, S&P 500, Dow Jones, and Nasdaq, hit record highs following Trump's re-election as the 47th US president. Meanwhile, gold prices experienced a sharp sell-off after Trump's win and the Republican Party's successful bid to regain control of the US Senate. Investor sentiment swung decidedly in favor of risky assets. Gold, traditionally seen as a safe haven investment, suffered its largest one-day decline in 5 months, plummeting by almost 3%. COMEX gold prices fell to a one-month low of $2,650 per ounce before attempting a rebound, briefly rising above the 2700 mark following Federal Reserve widely anticipated 25 bips rate cut. Despite this, stronger dollar and elevated Treasury yields kept gold prices under pressure, pushing the prices lower and for the weekly basis down 2% to close the week at $2,694.8 per ounce. Silver also fell sharply, losing around 4% amid broader weakness in precious metals and base metals. Technically, MCX Gold's December futures on the daily chart is trading within an ascending channel, hovering near its lower channel support. A breakdown from this level could signal a shift towards bearish momentum. Additionally, price is trading below its 21-period EMA, reinforcing the negative bias. Price may test the support at 76,100 with a further decline potentially finding support at 74,800. On the upside, resistance is positioned at 78,600. On the other hand, if we take a look at silver, MCX Silver December futures has given a breakdown of its rising trend line, signaling a bearish outlook. The price is also trading below its 21-period EMA, further affirming the negative momentum. Support is likely at 90,000, with major support seen at 88,200 if the decline continues. On the upside, resistance is seen at 93,800 rupees. Moving on to other non-agri commodities, LME base metals closed mixed last week while WTI crude saw a sharp pullback as investors were underwhelmed by the size of the China stimulus package, raising doubts about its ability to effectively stimulate Chinese economy, particularly in the face of potential US tariffs on Chinese exports. Last Friday, China's National People's Congress (NPC) announced a 6 trillion yuan debt swap program aimed at alleviating or easing local government debt over the next 3 years. Initially in the week, oil had surged to a 3-week high of $72.8 following amid supply disruption concerns owing to the potential for tighter sanctions on oil exports from the US on Iran and Venezuela, and a significant reduction in US oil output due to Hurricane Rafael. Looking ahead, market participants are now shifting their attention to a possibility of a so-called red sweep, where Republicans secure control of both the White House and Congress, both upper house and lower house. This could make it easier for Trump to implement his economic proposals, and in turn may prompt the Federal Reserve to hold off on additional rate cuts if inflationary pressures start to reaccelerate. So this is going to keep gold prices under pressure. Apart from that, this week, investors will be paying close attention to key US economic data, including inflation figures and retail sales numbers, as well as remarks from several Federal Reserve officials. Fed Chair Jerome Powell recently remarked that he hasn't ruled out or in a December rate cut, suggesting that upcoming economic indicators will be crucial in determining the Fed's next policy move. So overall, this week, US inflation and retail sales number will remain in focus as markets seek clues for December rate decision. On that note, we conclude this edition of Commodity Audiocast and hope that we've offered you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.